Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the last week, and a peek forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market posted modest gains in the last week as focus really moved away from geopolitical issues to earnings. The major market indexes did hit new highs, the Nasdaq an all-time high, the S&P 500 a closing high, just missing those highs of last September on an intraday basis. Broad rallies came early in the week as tech stocks led the way up, as they have been, and earnings came out in a way that really helped lift the market early in the week. United Technologies, Whirlpool, Twitter, big earnings reports, and they surged to the upside. Midweek saw the markets kind of calm down as Asian markets gave ground and China indicated that their economy is slowing, and they lowered expectations of more stimulus. They put that giant amount of stimulus in the last few months, and I guess they're just waiting to see how that works, but they did indicate their economy is under pressure. The markets got a good lift from Microsoft and Facebook also when their earnings came out, but even with that, the market really started to stall late in the week. Semiconductor stocks on Friday were a huge disappointment. Actually, Xilinx on Thursday, and then we saw Intel come out on Friday with a big miss, and they warned, and that should slow down the buying panic that we've seen in the SOX indexes. That was just surging, the semiconductor stocks, and those were big leaders on the upside for the market. Still, we get a report on Friday that helped, which was the GDP for Q1, up 3.2%. That was much stronger than expected, and that kept the market from moving to the downside on these tough earnings out of Intel. Bond market really didn't believe it, as the bond market also moved to the upside after hearing that GDP report. And I would say that there now appears to be a quandary going on as we have the Fed now looking at, well, growth getting stronger, and that has to be putting them, questioning what they should really be doing next. Were they right to pause when you have this strong 3.2% number? Of course, the U.S. market is the strongest of the Western world, and for most of the world, maybe only China's numbers are stronger. And you can still give credit to the change in the tax code that we saw that really has helped corporations, maybe not so much people, but definitely companies have benefited from that. And we really see, though, that there are conflicts in the earnings reports coming out, and warnings out of M and out of UPS. There is apparent slowing that is happening in the manufacturing sector and maybe even consumer. So there is this push-pull. There's an argument going on right now about whether things are really good or things are just false and they're actually really bad. And we're going to probably be in that condition for the market for some period of time. I think this is going to bring volatility back into the market and bring it back soon. I'm going to bet that May is a corrective month and that we see a very sizable down move. Yeah, I'm betting that and committed to that. I think we're going to see a strong decline during the month of May, but that's likely to be followed by another upside move into fall. These overall patterns in the stock market are really strong, and that is a condition that it would be pretty rare to see it just fall right off of a cliff and then not at least try to come back and make higher highs again. So that's what we're really looking for, is a really bad month of May, some pretty sizable selling and a correction, and then the market's doing better again later into the year. Stocks for the week: the stock market up about 1%, the bond market up 30's up about a full point. So you see they moved up together this week. 10-year yields drop about 4 basis points. Gold had a good Friday as the dollar finally started to give some ground, and that's up about $11 on the week. And we think that there's a really good time coming for the gold market out there, and you're going to want to watch our video that we did on the big picture analysis of the dollar versus gold. All you have to do is become a level 2 member or higher, and you'll be able to watch that very insightful video. So the dollar gains about 0.7% for the week, and we think it is peaking, getting up to our target high for the year. And now we don't think there's much more to go there. Oil falling off about $1 for the week. It had a good early start to the week and then had a big reversal, going down pretty hard on Friday. And I'm going to show you in our short-term view coming up that we think that the oil market still has some pullback to go here in a correction. So make sure you stick by and watch for that. That's the opening. We'll be right back with the best and worst for the week. All right, make sure you follow us on Twitter at askSlim and become a YouTube follower. We'll be putting a lot more things up on YouTube, and we still do put up a version of this show every single week. So make sure that you do follow us. I want to tell you that the charts that we're going to look at right here are our cycle charts. Weekly, we do weekly and daily analysis on a huge universe of stocks and ETFs and futures. And I'm going to show you the 5 best and the 5 worst this week. A little bit different than we've done it before. I wanted to make sure I focused on things that I thought were actionable. If you want to see our huge universe of analysis that we do, you need to become a level 4 member. That's for Thinkorswim people that have those accounts, because that's where we build our charts on, and I think that you will have a great opportunity to see a huge amount of analysis if you do become an askSlim level 4 member. All you have to do is write to support@askSlim.com and ask them for a trial. It's a 1-month trial for $73.50, and you'll get access to our entire amount of content that we have out there, our rankings and trade setups, our library of over 400 videos for traders and investors, plus getting our stock index report weekly and ETF review. These are just unbelievably comprehensive reports, all of that. And if you want to become a level 2 member, you get the videos and also those 2 reports. So you can also get a half price for that, right? Support@askSlim.com. All right, so we're going to switch over now and look at the charts. And we're going to look, as I said, at the 5 best, the ones that I think are the most actionable. It doesn't mean they're all buys, though they might be in this case. And then we'll switch over to the worst of the week, and we'll look at the 5 worst stocks. And stocks, there may have been stocks out there that were better or worse, but I want to kind of stick now to things that I think are actionable, which are, probably the most value to you. First one we're going to look at in here is Twitter. This is the Twitter weekly chart. And you can see in here that we have our cycle analysis. If you're new to this, you can see that we have our cycle brackets on the bottom. Those help us tune into the rhythms of the market, the advances and declines, and key into important bottoming areas. Now, we had an unusual pattern right over here where this diamond showed up in the middle, and that diamond has an upside objective that you can see up over here near $48. Also, you can see this cycle right over here, which we're projecting to get up to about 42.5, 43 in this advance, and then later in the year up to that area of about 48. So here's your corrective period in here, and then a dip. So we kind of think that we're going to get further rally here in Twitter as they came out with very strong earnings, up 14% on the week. They've done things to improve their model, and they're improving their monetization, and we believe the stock is a buy. We think that it might fool around in here a little bit, get up to the 43 area, pull back here in that May correction that we're talking about. But if it does, we think in this period of May, early June, that's the time when you can really get maybe some upside spurt, as you can see right there. We could easily see the stock moving up from 38 to 48 based on this pattern that we see here, and we think that Twitter is quite bullish and great earnings report. You just watched the opening to the askSlim Market Week show. To watch the full show, just become an askSlim free member. It includes my analysis on the best and worst stocks for the week and my short-term view in 5 major markets for the coming week. You're going to learn a ton about charting, technical analysis, cycle analysis, my unique way of looking at charts, and we show lots of ideas that may bring some great setups for you going forward. Here's what's in that great offer that I think you're just going to get a ton of benefit from. You're going to get the full Market Week show. You're going to get Market Week archives, the special videos from our premium library, sneak peeks to great new products coming up, and all kinds of things along the way that we're going to put in there that you're going to enjoy. All you have to do is become an askSlim free member, and there is no credit card necessary. Please do join and take advantage of that and watch the rest of the show.